Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the charts for Vechain to see what's been going on most recently and what I might expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you really do appreciate it, there is now the thanks button just below the video, so why not give that a try as well. And by the way, if you haven't yet joined us in Discord, guys, why not check it out? Links in the description down below. It's a fantastic community talking crypto 24/7, completely free, and I don't think you'll be disappointed by what you find on down there, so why not go ahead and check that out as well. Okay guys, let's get into this. Right, so here we have a Vechain paired up with USDT. We're on the hourly chart and we are using Binance as a data source as usual. Now on here, obviously, we've got this really boring sideways trade. It's actually turning out to be a really complex move here. Pretty much tracking exactly what Bitcoin is doing, and we are in this kind of ABC structure coming down. I have this kind of scoped out at the moment at about 1.7, but the higher that we go, the potential higher this low becomes. But if we don't actually push as high as 4 cent, then we would of course expect this to go down a little bit lower. So what's really interesting about this is that we are continuing to kind of trade sideways. We had this push up a little bit higher on the 23rd, a little bit higher than this move here. But then we pull back down again. And, if we take a look at the stochastic, we are correcting nicely. We are looking for a surge upwards. It is likely to happen. But ultimately, the macro move is still down, right? We are still going to pull back down. There's a real high probability of moving down into these lower ranges. But for now, it's actually looking like we have to move up a little bit further. 3.666 is probably my conservative target. That one seems the most probable. But let me go through what's going on here from some of these recent moves. Okay, so we've got this A, B, C structure here. And actually, what I should do is I should use the correct terminology. It's not really an ABC. So I'll go ahead and use WXY. We'll just do that, for example. Okay, then we've started to track down. Now, this is potentially an ABC to the downside. If we take a look at the 4-hourly, we're oversold. The 8-hourly still has a little bit more room to go. Okay, so before we start talking about a bigger surge upwards, it might just be that we're actually still in some kind of expanding. No, it would be a 5-wave move if it was an expanding flat. So yeah, it will be interesting to kind of see how this one plays out. It looks like a zigzag to me, but it could be a 5-wave move come down, and then that would be our expanding flat before we have that surge up. It'll be interesting to see how this one plays out. There's two options the way I see this. We've either got a zigzag, which is a 5-3-5 structure, or we end up with 5 waves altogether, which would be a 5-3-5-3-5 structure. Okay, basically like so. Right? We have that pullback before we have that surge up. I don't think that's actually going to happen. So I'm thinking it's more like a zigzag, which would just be something like that. But again, it does mean that this is an odd structure. So we'll see. Obviously, Elliott wave doesn't necessarily align perfectly, considering the liquidity inside here. But we have 1, 2. And I can go 3, 4, and 5. Okay, so we have that 5-wave move there. Now we are tracking up here. This is not a 5-wave structure, but just an ABC. So A, B, and C. I do expect us to pull back down. And if we go ahead and move this over, and it should actually be a WXY, but nonetheless, I always use ABCs. But if we take all that off, what we end up with is an actual ABC, a zigzag pattern, taking us down to about 2.7, right down about here. And then from there, we should then think about a move on up. Now, it's possible, of course, that all these micro movements that I have over this side, I can go ahead and remove them, because what it could be is actually just on a much slightly larger scale here, W, X, and Y. Then we have the zigzag correction here, and then we move on up to our final target. Now, under this particular pattern, we would then look at it slightly differently again on a more deeper macro. Okay, so that becomes W, this becomes X, and then up here would become our Y. Okay, so we'd end up looking at it like this. Okay, so we end up with this kind of really solid bounce to the upside, which is our B wave. And if we go ahead and actually just move that back, grab hold of the fib here. The fib, that's the one I want. There we go. And I just go ahead and check a couple of things, right? So I'm going to remove that for a sec. And what I'm going to do is I'm going to essentially just take this low point right here. I'm going to take, actually I need to do it from the high point to the low point, which is actually this one, to this one. And I'll move this over to our theoretical low of 2.7, right? And here you can see it just comes up to that 4-cent range, okay? And that 4-cent range is really critical. So again, all of that's looking pretty good. Still looking a little bit shorter than where we were. So this was at 4.043, and I reckon this is now 4.0413. So 4013. Okay, so that would put our low point right on this line just here instead. So yeah, that's kind of where I'm looking at it right this second, where I would think that we have that potential to kind of go. So we'll keep an eye on that one. Let me just remove that fib there. And what I'll then do is also actually now put in place the slightly larger macro. Okay, so here is your kind of really large kind of structure. You can see it here, A, B, and C structure. So if I go ahead and grab hold of this wick low and this wick high, come on, I know you're there, come on, in you come. There we go. And then I move this over to here. You can see us moving down to 1.760. So again, still not a lot has changed here. We could take a look at this on a much deeper, bigger scale. If we come over into our daily, is quite messy, but hopefully it'll show us exactly what we're looking at. Some kind of A, B, C structure taking us down towards that 1.7. And again, A, B, C on a slightly bigger scale. So we've got the macro on the daily. We've got a sub-wave count probably on the 8-hourly. And then, of course, on that hourly or the 4-hourly, we've kind of got the same structure. We are talking about this real big pullback down towards these low levels. So there's going to be some fantastic opportunities to accumulate some Vechain, you know, at 93%, maybe even a little bit more than that, reduction from the all-time high. So some fantastic opportunities are going to be presenting themselves in the very near future, in my opinion. And it's going to be a fantastic opportunity to accumulate a lot of VET ahead of what I think is likely to happen next, which if we go to come out even further off this chart, you can of course see, let me just get rid of that stochastic. Here you can see, you know, you have a macro A wave, this is being our B wave coming on down, and then we end up with that C wave going higher. Now this is unlikely to go for a full extension. It's possible, however, with the fundamental changes that are going on with Vechain, that this could potentially move up to $3.15. However, I do want to urge that that's pure hopium at this stage, right? It is technically here is a 1-to-1 ratio, but I would be more wanting to focus in on these three key areas right here. Okay, so the 618 is 43.5, the 702 is 63.3, and the 786 is $1.04. These are going to be more key areas for me to really focus in on, rather than focusing in on $3.15. $3.15 is technically possible because it's a 1-to-1 ratio, which would be a most common move. However, I do want to be, you know, stressing that that is a huge target, and it would require Vechain to do a lot more than I would be expecting. Now, they are trying to move into the B2C world. They are moving into DeFi. They've now got their stablecoin, all that kind of stuff. But I would be very cautious to think it's going that high. Okay, instead, I'd focus in on, you know, that dollar level. We've been talking about it for a very long time. And the structure is still here. It's still very valid. Of course, the lower that this goes, so if we do drop down lower than 1.7, for example, then I would, of course, you know, expect it to be slightly different targets and all that kind of stuff. But essentially, we're right in the bear market low points, talking about 93% reductions from the previous highs. These are exactly where you want to be in terms of these previous lows that we had been at. So a good accumulation to be had right down at these low points. And then, of course, we're going to ride this up nicely. And I would be focusing in on this anywhere between the 618 and the 786, between 43.5 cent and $1.04. Obviously, we use a DCA model out in the same way that we DCA model in. But with all that said, done and out of the way, if you have found this video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.